How we all doing? Here we are. It is April the 5th, and welcome to another Traders Community podcast. We got the glorious Madavi here, and we're going to go through a day that really changed early on. The old mini taper tantrum, that they used to call it, if you remember back in the day, came about after the new deputy to be Leo Brainard just basically said some home truths. We got high inflation. If it gets out of hand, we're going to have to do something about it, i.e. combination of raise rates and scale back on, or actually speed up, the buyback of bonds, etc. So the old, so that put as we were going up pretty fast, and luckily we were able to get on that. It was all right around technical levels as we'll go in, so we'll go through that as we talk. So we'll go through that. We had the API numbers out for oil, more oil talk there. Natural gas up over the $6 marks. We had more Twitter news. There was a takeover bid today from, who was it again, Madavi? JetBlue, right? Buying,
buying safe.
That's right, safe. Spirit Airlines. Yes, Spirit Airlines, which is going to create a bit of angst because they've already agreed to a merger with Frontier. So let's get into it. And remember, this is not financial advice. We are just going through with experienced traders what we have seen, what we're looking at, both fundamentally, technically, and what is moving. So without further ado, let's jump on and see where we are. Merge with Frontier. So you don't need to hear me twice. I was just putting on the comments thing there. Gotta love that. Okay, so where we are now, oil is 101.30. We've come out with the API number after the close. Remember, that comes out on Tuesdays at 3:30. S&P is trading around 45.34. The Russell took a bit of a swan dive today, down, it's at 20.48 right now. Vol, 22.87, Volex. Nasdaq got over 1,500 for a bit and then just said, whoops. Here we are at 14.863, and Natgas 608 after reaching 620. So let's go through the SPOOs first, shall we? And what we have there was, if you actually will start off with the weekly, but remember we came right to that breakdown, and we started off with a continuation from yesterday's move, and then we ran into headwinds, as will become clear on the daily. Remember the levels, the key levels, and as we work it down, the instigator was that Brainard speech as we talked about. So let's walk it down to the 10. Remember, again, so this is quite an easy sell actually today, because we had that double top, we had a perfect AB. So you remember 2 days ago it spat the Tankin, the orange line, and it's come back today. And we'll walk through actually the trades we put on, myself on SPOOs and Madavi on Nasdaq. So we closed basically right at the Tankin, just to confuse you all. As far as, so this very clearly, understand the bond market, because that's what drove this, the bonds and Forex, right? So important to understand that. So today, as of yesterday, at the end of last week, we had the plus 2.8s. We came down in one wave, we hit the cloud, and we dribbled up right to test the breakdown level. Isn't that uncanny how the breakdowns work? If you trade POCs and VPOCs, that's basically the same concept. It's where all the volume is. So that's market profile. So in here, we dropped out of that pennant. We came back, and look what we tested today, this 45.90 area, and we've come off. And right at the end of the day, what's interesting, we didn't go lower here. So this got a bit choppy. This was actually, if you follow Apple very much led this almost to perfection. And Tesla had an influence there too, of course. So it was a really nice movement as far as that goes. And if you walk it down the hourly, you can see what we did. So we broke this previous high, and then we came off. And this is where Brainard... So you had a combination of fundamental and technical, and here's that technical level. So you want to know where the so that if you talk about order flow or gamma, all this sort of stuff, just keep it real simple. Look at your IOs, look at your charts. Okay, that's where everyone is. Remember, most people trade, hold on to their losses, and trade just to break even. I mean, believe it or not. And so we came down and we spat 8/8. You see this fractal mirror image? You see here's the breaks. We retested it. Here's the break up. We retested it. Remember, these are people that are trapped. The scalpers have got caught. All of a sudden, a bad trade becomes an investment. So that's what that's doing. 5 minute is what you're trading off. And you can see again, this is that Brainard move, right? And then bang, came back. This got a little bit easy. If you look at the longer one, this is where it got choppy. This stuff in here. Remember that, Madabi? I had a trail, got hit. You put it back on, and then you get on with it. But Apple, if you have something else as a handbrake and not too much leverage, it'll help you stay in these trades. Whereas NASDAQ, so usually it's the other way around. NASDAQ was much cleaner. So let's look at, let me just bring that up. On the NASDAQ here. So remember, the weekly's been trading very similar to the SPOOs, but look how different it is. It retraced that whole bar from last week. Yesterday. Look at that. That's crazy, right? So that's a lot of white. But now if you trade Apple, you know that's what it did. It was 174.80 up to 179. Bang, the whole thing today. So you can see, remember, Apple's what, 20, it's more, isn't it? Like 40%, 20. It's a huge percentage of the NASDAQ. So do you want to, let me bring up an hourly chart for you. That might be better. There you can see it clear as what happened today. Do you want to walk through that, mate?
On the, well, I'm getting there right now.
Yep.
All right. I mean, on the NQs, I didn't do much today. Basically, I did 2 or 3 trades in it, and it was basically getting stopped out of 2 shorts and getting short again, and that's all I did. I didn't even buy that run up at the end. I stayed short and got stopped out, and I just kept on riding it down the whole day, and I was trading mostly stocks today.
Yeah. Was it you did? Well, you still had that carry on. I shared the charts, by the way. I didn't realize. I realized I didn't have it up. Yeah, you did a killer spread yesterday, selling Donny, DWAC, and buying. I
use up a lot of my buying power.
Buying Twitter, yeah.
I don't have as much as I normally do in the NQ, because doing that spread thing. When you sell shorts, they use.
100%. Yeah.
But it takes a lot of your buying power, especially when you do a few shares.
Right.
So yeah, that. Buying Twitter and selling Donnie worked pretty good.
It did work good.
I call him Donnie,
Yeah. So that's DWAC, that's Donnie, and for obvious reasons. So look what we did. Mirror image of what we saw on the S&P. Came right down to that break level and right up here, the break level. So there's an old saying. So what happens a lot of, particularly the dribblers and all that, they don't buy until it's a break. Most breaks, if you look at some great traders like Ed Secoda and Paul Tudor Jones and that, they make their money off the spits, right? Remember, and so that's why so it works, I guess, if they never take a loss is the theory, then finally it all collapses and you know what all those dribbler stocks are like. So that, in a nutshell, you can see it at play there, you can see it at play here, right? Mathematically perfect. Back here, plus 1/8, 2/8 move. See the fractal either side. It's all clinical math stuff, which runs. Most algorithms don't have emotions, remember? They're just maths. Okay, so let's look at those stocks. We should have them here. Then we'll go into bonds. Where did we put them? Let's look at Apple real quick. So you know what I'm talking about. So here's that move. See, same thing, the same rising wedge that you saw in the others. Apple didn't actually get as strong today as what it did yesterday, right? So remember, Spurs and Nasdaq went higher here. This didn't. So that was a bit of a warning, a negative divergence. And then it was just red all day. And then it did a bit of work around the options levels. But look at this. It didn't even this is an hourly chart. You can see it didn't even stop at the top of the cloud once. And which is interesting until you realise 8/8 is 175, right? Right just under at 174.50. That's also the break level. Do you see how it all just a pattern, guys? You've got to have the discipline to stay in these and recognise these and working with a trailing stop, which worked pretty well today. A couple of times we got binged out, but pretty well able to keep it. And you recall the trade we had yesterday was we bought the calls on Friday, we sold them all yesterday. You can see why, right? So we just take that profit, we move on to the next trade. It was better. I'm looking. Johnny Hindsight bought the Apple puts, yeah, but it was better to do the S&P short today rather than doing puts, just because there wasn't enough reasons set up to make that a really good trade. We try not to gamble too much. So where did we put? I thought I had Twitter on here. Did I put them on an? I think because we looked at a few others. Well. So here's one that you know that Madavi's short, and we did some puts on this today as well. Here's Snap. So that went up. Remember, unfortunately our audio was really bad yesterday. We stuffed it up. But so what Madavi was saying yesterday, that Snap shouldn't have, I mean, it's not Twitter, but it went up as Twitter. So he put those shorts on just under 40. You can see it worked its way down. Not a big trade, but a couple of bucks. In that move. And so let's look at Twitter here. And you can see, so remember, you got to stay unemotional, people. So we know, we went through, or at least my theory, on why Elon's doing Twitter. And you can see what it did today. So this is yesterday, this is the announcement. He's basically trolling it. He's empowered it himself and had a bit of fun making a quick, 600 million or something, if it stays up here. He's now a director, and I saw the undertaking is he won't own more than 14.9 shares. I think he's at 9.9. Unless he resigns as a director, he can do that 90 days later. So that's probably just the reason for him to get on it. Anyway, as you can see, look what it did. It went on that announcement being director, it gapped up. Or it actually didn't gap up, it ran up nice and cleanly. Got to plus 3/8, just short of 55, which would have been a big open interest level. And then it sold off from that point all day. And finished right at the Cajun. This is an hourly chart, so that captures your move. So isn't it amazing, even with all that noise, it still works out perfectly. And you're aware with all this Chico overbought. So it's very hard to be unemotional when all you're hearing on the CNBCs and all this, all the hype of all this stuff. They're basically the stock jockeys. And then this came down with Brainerd as well. If we look at Donny, let's put that in. So if you recall, this is Truth Social. I think that's what it's called, right? So we went through this yesterday. So if you remember, a lot of this was because, a lot of the excitement of this was because it wasn't Twitter, wasn't Facebook. You could say what you want, all that sort of stuff within reason. So when Twitter comes out, that took a lot of that away. But it was already coming off, wasn't it? They've had problems with, it's not an easy process apparently to get on it. Not that I've tried. But apparently it's quite a process. So anyway, you can see we sold off yesterday. It's the inverse of Twitter, and it sold off all day down to, 45, Madavi? That was a nice trade, that one you did. So there's Donny. And we didn't really do too many other trades. We did one Walmart calls bought yesterday. That moved up nicely today. Took some off, kept it. And the only other one was a Twilio put spread. There wasn't a lot of... the energy sector kind of came off in spats today. So a lot of that after you have a big day, generally you'll have a consolidation in a lot of these markets. People are taking their profits, which makes sense, right? We're not in that... and you got your more conservative investors in those sort of stocks. Any other stocks we can think about? That's it, really.
The other one, what's it called? BBAI, and then we did save.
EVAI. EVAI?
Yeah, Go-Go's going too.
Go, yeah, that's a good song. EVAI, was it that one? I'm trying to think.
AI, yeah, that's the one I was doing.
Is that coming up? Sorry, I logged out of my EVIA. Oh, IA.
Go. See if it's a go. Let me check out the volume. Nah, volume too light. I'm go. 860,000 shares.
We've traded that before. Back, it was one of those kind of stocks.
Up $1.60, but only traded less than 1 million shares. And you know me, I don't trade stocks unless it's got millions of shares.
Yeah, you can just get caught on it.
Yeah.
So here's Go. So I don't know if this is usually delayed at this time of the day. I've got to fiddle with it because we haven't looked at it forever. So this has been dribbling up since about $10 by the look of it. So let's have a look at a daily chart on this. Okay. So on a daily, I remember this. Wow. So this has moved. This has gone from like $6 up to $20.
You know, the best thing is short JetBlue and buy Save.
Yeah, okay. Yeah, we should. That was the other stock I was meaning to look at. Yeah, Save. So Save, as you know, is...
I sold a little bit of JetBlue.
Spirit?
JetBlue.
Yeah. I'm going to put up Save real quick.
I just shorted it at 13.20.
So here's Save. Now, here's what's interesting. It's gone back to that level from February. Do you see that?
Yeah.
What's the bid for $33, isn't it?
No, $26.91.
No. The what JetBlue wants to pay by Spirit for? 33, right?
I'm buying for 33.
Yeah. So that's up here somewhere. So the fact the stock isn't anywhere near it gives you an idea that they don't think that agreement's going to be broken. So it's going to be interesting what happens.
I'm not sure.
Yeah, so there's a lot of uncertainty in that. JetBlue, let's have a look. JBlue is their thingamajig. So, JetBlue, there we go. And so JetBlue is actually obviously down on those numbers. But JetBlue, it looks like it's just been a steady decline. Wow, this stock doesn't move too much. I'm used to looking at some of those other crazy airlines, like American Airlines and all that. So this got down to $11 at the start of the month, or last month now, and rallied to here. We got the announcement today. So they're two to keep an eye on, and that's, as Madavi said, there'll be a lot of arbitrage selling this, buying the other one. But there's a lot of uncertainty with this one. So keep that in mind.
Hey, I gotta grab this call.
Okay, so let's move on to oil and gas. So natural gas continues higher. It's got a 6 handle. And we're really running out of time where this can be the bearish version. I don't know what happened to that. I just had it there. But you can see, so this is a 3 or a 5. So keep it like that. It's working its way up. It's almost at 8/8. And we have the EIA report out on Thursday. And we're inundated with news. So keep an eye on that about Russia and Germany. But let's be realistic. You can't just there's all the, so basically Germany's a hold up in the whole process there because they're very beholden to Russia. We're coming into the warmer months, but there was a report yesterday that it was the coldest globally on record yesterday. So just when you need climate change to kick in, apparently it's not. So keep that. That's an interesting concept. Obviously, it's not really related, or is it? Who knows? With all this turned off, perhaps that's cooling down the planet. I'm no scientist, obviously, but anyway, that's the reality. So that's put a lot more. Let's put some demand back there, and we got a lot of different things going there. So keep it that in the background with technically. So don't get ahead of yourself. Stay rational. You can see this is 4/8 and 8/8. So this is massive level. If it gets over here, it becomes problematic. Remember, that's also a massive. I want to say it's on the weekly, but that's like from 2009 maybe. That was a double top. So again, it broke this triangle. See, it pays to be patient rather than all this, and it's just gone up nicely for you. So that's natty. Keep that in mind. As far as the 60, we want to see how you can trade it intraday. You can see it bounces off the 50 here very nicely for day traders. This is each day. So that helps you with your overnight risk and how you can manage it. So you got your breakup, retest, and you see how that works perfectly with your Murray, right? So that just worked up from 2/8. You to add 8 to that, and where do you get? See? And it's got the same levels up here that you need to watch, obviously. Okay, let's move to oil. So the oil has been interesting. It's been very, very volatile, very difficult to trade. If you watch your P&L, very, very choppy. You can see the long bar that's going on this week, and it's very much between the weekly Tankin and weekly Cajun, and look how wide that is. So if you use pivots, you know how wide that range between S1 and R1 is. Quite dramatic. If we look at the daily on this, again, it's not quite getting there, is it? This one was unbelievably did the whole thing. So what you got is a lot of noise. You've got constant politics from the US about blaming the oil companies, getting oil companies together, then demand aspects, and so politics out of both sides, or speculators, if you want to call that politics. And then what's going on with Russia, Ukraine, and unfortunately there's a lot of noise everywhere. But what we do know is we got very high inflation, as Brainard pointed out today. So you got to look at on the bear side, demand destruction. On the positive side, a pickup in the economy. So part of the reason that we sold off today was also, no doubt, what Lyle Brainard spoke about, was a stronger services, right? So that would mean more driving and that sort of stuff. So you've got a lot of possible bifurcations going on with all the politics, war, economy, interest rates, bonds. It gets so there's a good tweet we retweeted from Alicio that was, it's a good chart of the MBS bonds. So they're now, which is mortgage-backed securities, ETF is now at the lowest level since 2009. So we all know what happened back there, right? Which is interesting because, yes, the speed or the velocity of this rate of change in bond or interest rate price has been very dramatic, but we're still at relatively very low prices, right? In comparison on the short end. Now, for the mortgage, for us poor buggers, it's a lot higher. Our food's a lot higher. Our gasoline price is the highest I can recall. And I've been in a few hurricanes. Perhaps it was higher, but I don't recall it being higher. That's how high it is. Your food bills are higher. So all these things are real. So how that all factors in is going to be interesting. And yes, it is supply. Yes, it is demand. Pushing and pulling there. Okay, so let's look at how we went. So, we have a few of us. We have a small little Discord room, basically energy traders. We kind of know each other for a long time. And it's been difficult to trade as far as systematically with things like S1 and R1 because it's so fast and it gives up. So normally you'll get nice range trades, then consolidation, right? Nice range trades. What we're getting is weird spates of consolidation and then out of nowhere. So it's very much news driven. You can look at today, and I don't even have the pivots on here just because they're so wide right now. But you can see we had this nice wall of support down here at -1.8. You can see all the buys here. And then we didn't, if you go to the stock market charts we looked at, the S&P, we got back and tested the breakdown level. And I think this is the interesting thing. It's not even getting a chance, right, to do that. And if you've seen, there's less and less in open interest. If you look at the COT reports, the spreads are jumpy. They may be tight, but there's not a lot there. So it's not as tight and safe as you think. So, okay, so after market, we had the API number. Remember, that's not as important as the EIA number, which comes out tomorrow. So what we notice, and give our friend Robert Gibbons a follow there on Twitter, and he's so he does a good little breakdown of all these. He's been in the business a long time as a journalist, etc., and understands what the different markets look at. So here's a good little. I'm just going to read verbatim what his tweet says, and it's replying to the API number. So API data, crude build, and at Cushing might dent bullish settlement. So remember, Cushing is a WTI hub. If distillates and diesel inventory also manage builds and gasoline stocks draw is moderate, with the demand steady. Job growth means workers are moving, able to overpay for oil for a bit at least. So that's the key of a lot of this. The people got to stay in their jobs or keep their jobs. So that's where it all comes down. So that's what makes it hard. So you read a lot of these comments from Wall Street types or bankers that have no sense of being, overpaid bonuses or not understanding the little guy, right? So does the Fed understand? So so even Brainard's comments, you can take it a little bit away. Yes, are we going to, because it says about the inflation, then it says we got to basically say we don't crush it all. So nothing, that's why we like to mix up. Where we have the technicals and we mix that up with fundamentals, if that makes more sense. If you've got any questions, just shoot them to us, then shoot us. And that pretty well covers everything. Let's have a look, go back and look at our bonds. So here's what we're seeing. So you can see what's been going on. So this is the June contract, and you can see, bang. So this is obviously, it was weak from the outset today because of inflation concerns. And then you can see, remember, this is bonds, so the price lower means yields higher. And you can see the aggressive sell here, and we're coming off all day. So these are at multi-year, multi-highs, right? Or as far as the curve goes. You can see that right there. If you want to flip to the other side, here's the yields. And you can see we're back to and we actually got over this, and we mentioned that in the thing. So remember, this was a perfect bull flag. We put this in the weekly report. Hopefully you guys are looking at the weeklies and all that. So a lot of congestion is the reason I go on about harp on, if you like, about the dribblers. They don't actually in it, they just follow. And it really does irk a lot of So there's only a few pro traders on Twitter. And then when they share their view, they get attacked by all the dribblers or people trying to sell subs. So it just pushes them away. I mean, to be honest, I don't know how much longer. Sometimes I can't tolerate it. We talk some of the other people. So that's why you see us taking in bursts. Because as much as we want to help steer people the right way, it becomes very frustrating and does end up affect what we do because we don't want to be mentally. So very simply, use these grids and use these very simple technical patterns, because that's what the algorithms are using. And you want to be ahead of the curve, right? And so what happens when people get really bullish, vol gets really cheap. People gets really bearish, it goes the other way. And so you can see what's going on there. Remember, as I've said before, buy puts when you want to, not when you have to. So that's a good look at the 10-year. And that's your benchmark, so keep an eye on it. We had moves overnight with the RBA in Australia, big moves on the Aussie, as they changed one word, and that word was patience. Not many Australians aren't really known for patience. I thought it was kind of funny. Got a laugh out of people down there, no doubt. So the last thing we will look at is commodities. So we had a look at all the grains, but let's have a look at gold. That's kind of our main one right now in this sector. Let's look at the hourly. So what's interesting with as we go to gold, so back in the day, gold was inflation, safe haven. So it's also an asset. So when bonds are going up, that becomes a safe haven. If it's like US Treasury bonds or Swiss bonds, German, the Bund, that sort of thing. AAA or, well, the US isn't AAA under everything, but you get the gist, safe haven. So if we look at this gold, I wanted to break it down short term. Through the hourly, we had this collapse here down to minus 2.8, and we've run up since then. So this was if you recall, we had the break up, we came down. So we've been chopping between. So it's a very indecisive market between, and that's like it's just a $40 range, which isn't, but that's decent for this market, right? So that you can see what's going on. So today, it was the inverse to bonds, right? It fell as bonds went up. So it actually mirrored stocks. So interesting play there. Okay, so that's about it. Tomorrow we're going to have the jobs numbers. Everything should be on the website that goes with this. How Europe did, Asia did, the major news stories. Do yourself a favour with that. And what we got going out today for us energy traders, it's going to be the EIA report and more noise and politics out of Ukraine, Russia, the US, etc. So I hope you enjoyed it. Madavi unfortunately had to take a phone call. If you like what we're doing, like it. Do us a favour, share it with your friends. The more interested and the more feedback, the better it gets. Or we know what interests people. As far as assisting with your trading, investing, and punting, I guess, the tricks of the trade there. And that's it. So have a great evening. Thanks for joining us, and we'll see you all later. Bye now.